Welcome to this episode of Personal Finance Podcast. In these podcast series, we always focus more on investor management rather than investments management. Our aim is to try and understand our investment behavior, our biases, what we can control, and what we need to learn beyond the daily news and headlines that we are all exposed to 24/7. So let's talk about today's story. And it's about market crashes. And we are surrounded by this news all the time right now, aren't we? See, exactly 6 months back in September 2024, Nifty 50 touched a high of above 26,000 levels. But from there we fell, and we fell to about 22,000 by March 2025. And this is more than 15% fall in a matter of less than 6 months. So did people panic? Yes, people did panic. But some seasoned ones were ready to take advantage and invest during these times. Well trained by me, may I add. But many asked about holding on and watching where this goes. But actually, if you sit back and think, do you realize that if you see the trend exactly a year back, sometime in March 2024, Nifty had hit 22,000 level for the first time. And at that time, we talked about hitting a new high back in March 2024. Since then, we grew and then we fell. And suddenly today, March 2025, 22,000 level is a big low for us. In hindsight, when you look at the numbers like this, how do you feel? Do you really need to worry? See, the stock market has always recovered from crashes. That is the fundamental truth. The market moves in cycles. It falls, it rises, it corrects, it recovers. Over time, however, it always goes higher. The trend is upward. Every major crash looks like the end. It feels different. It feels permanent. Every correction creates panic. But history shows a different story. Look at the past. The market has survived wars, recessions, political crises, inflation, pandemics, and financial meltdowns. It has recovered from these, every single one. The biggest declines looked terrifying in the moment. Do you remember COVID? Terrifying. But they were all followed by even bigger gains. Not once has a downturn been the final chapter. Not once has the market failed to move forward. The investors who panicked and sold, they never saw the upside. Some never reinvested. Some waited too long. Some lost faith in the process. But remember, a temporary decline becomes a permanent loss only if you exit and don't return. And that is why patience matters. That is why discipline matters. The biggest threat to your investment success isn't the market. It's you. It's your reaction to the market. Because every crash plants the seed for the next rally. Every bear market sets up the next bull run. Selling during a downturn locks in the losses, and staying invested allows us for recovery. Investing more allows us for even stronger future gains. So the biggest rebounds often happen when fear is at its peak. The best buying opportunities come when people are most afraid. The market rewards those who stay the course. It punishes those who react emotionally. Remember, every recovery, it takes time, but it recovers. It leads to new highs. And this is why investing works, not because it's smooth, not because it's predictable, but because it is unpredictable. The investors who win are the ones who understand this, who understand that the market going down is normal. It's a part of the process. They will fall, and the markets will fall again and again. They always do. But if history is any guide, they will rise, and they will rise even higher. So success is not about avoiding downturns. It's about enduring them. The market will recover because it always has. The question is, will you? Thank you for listening in. Hope this helps. God bless.